Let's get right to the floor show. Joining us now is $70 billion in assets under management, Regions Chief Investment Officer Alan McKnight. Anything worry you about this pronounced move downward in the hyperscalers?
I think it's exactly what you were just talking about, which is we're finally starting to shift away from the hyperscalers really driving earnings growth, and we're starting to see some of the benefits with companies like Caterpillar. But those names that have only been on the come line of saying we're going to actually build this all out, and it doesn't matter that our free cash flow is deteriorating, and we're having to throw capex after capex in a race to the top, I think is now starting to transition a little bit, which we think is a good thing.
Well, I know we're showing the S&P right now, which had been in the green. Now it's down 34 points. The Dow is losing a lot of its gains. It had been up 323 points. So you look at the big laggards on the Dow, and they would be Amazon's in there, Microsoft. So you look at that, the hyperscaler piece of it. But I said investors toggle between fear and greed because on any given day, these names are jumping.
Without a doubt. I mean, it's the signal and the noise. There's a lot of noise right now because people are trying to take every small data set and say, I'm going to extrapolate that going forward. The reality is you have to buy these names for the long term and decide, do you think a couple of companies are going to drive the benefit on the AI side? But then let's see the efficiency gains. Let's start to reallocate some capital into those companies that are going to benefit, such as Caterpillar and others, where they're actually applying and utilizing this to be more efficient and have higher margins.
What's the excuse for SMCI having such a big jump today?
I think the reality is it's just a reallocation short term. To your point, you get these little bits and rumors and tastes of something to come, and people pile in.
Well, I mean, they announced. They said, we've delivered the blueprints to NVIDIA.
They did. But I think what we've seen over time is that each time someone announces that, then you have to peel back the onion a bit to say, okay, what does this actually mean? What are the returns going to be? And will 3 months from now it be exactly what was originally decided upon?
Are you surprised that investors are now asking that so quickly after SpaceX went public? The stock is taking a double-digit percentage hit today, third day in a row that SpaceX has lost. We've got SpaceX down at the moment 13.25%. Some of this has to do with news that it's going to do a bond offering, investment grade, but it needs to raise more money on top of what it raised during its IPO, most likely to spend on AI.
It's exactly what's been going on today with Alphabet and with Amazon, which is the capital markets are pushing back a little bit to say there's not an unlimited source of funds here. You can't just keep putting your hand out, particularly in light of when you look at the fixed income markets, spreads are so tight. So they're getting a really low cost of capital on these debt deals. And I think people are pushing back on that and saying, you actually have to show me the money a bit on what you're going to do with this money and the returns that you're going to be able to generate.
I think people are also turning, it's been pretty obvious, to the small and mid caps. But what's your favorite area of all in the markets?
I think right now what we've liked is shifting back over to international, quite honestly, and developed international. It's been a laggard for a long time. We know there's slower growth. We know there are demographic challenges, but it's trading at 14, 15 times earnings. And that's an opportunity set. So we love the fact that mid cap and small cap have finally caught a tailwind over the last year, and it's been fantastic for our investors. But we like to think, let's not forget about some of these international names that still have some opportunities there and are also going to be lifted by the rising tide.
A developed international.
Developed international.
Well, one thing that developed today is that we know Alan Greenspan passed away at the age of 100. He was the one who had, in 1996, identified what started to look like irrational exuberance in a certain area of the market. That would be the very early stages of .com and the internet. And he talked about irrational exuberance as sort of signifying this moment of what could be the start of a speculative bubble, which eventually could crash bigger parts of the market. What do you think he'd say about this now?
Well, first, what an incredible legacy he had. And when I think back to my early days in the business, as he's walking and people used to watch him with his briefcase going across the street, what was that? What would that mean? And try to interpret or translate from that. But I think what he would say today is, are we seeing protracted low risk premiums? And he talked about that in 2005, which I think he looked back in hindsight on what happened in 98, 99, 2000, and said, if this goes on for too long, eventually you're going to have to pay the dues. And it's going to be challenging, but not immediately, because we don't know when that's going to happen.
Yeah, and the market ran up for the next 3.5, 4 years until it did crash. Alan, good to see you.
Always a pleasure.